Hi everyone, welcome back to my channel. If you're new here, my name is Enrique. I'm a mortgage broker based in Southern California. And in today's video, I'm going to be sharing 5 ways to save the most money when buying your first home. And by the way, there's also a bonus I include at the end of this video, so make sure you watch till the end. And without further ado, let's get started. All right, number one is not putting 20% down. And there's two sides to this. The first side is you don't have to. There's programs out there for first-time home buyers like FHA that require 3.5% down. Conventional 3% down. The second reason is because when you look at the numbers, it doesn't always make sense. For example, I was doing a quote the other day for a client who had an extra $50,000 and he was like, hey Enrique, should I put these extra $50,000 into my down payment or should I keep it? I worked out some numbers, and if he were to put $50,000 more toward the purchase, toward the down payment, he was only going to save $500 a month. Now that's a lot of money, but ask yourself the question, would you rather have $50,000 cash in your bank account or save $500 a month? Preferably myself, I would rather keep the $50,000 in my bank account instead of putting that in the equity, because the equity is going to grow on its own. And again, if you don't have that requirement of 20% down or a higher down payment, it's best to keep that money in your account for a rainy day if you need to repair the roof, and you can always make payments toward your principal. At least for most loans, as long as it's a primary residence, you can always feel free to make payments directly toward your principal. All right, number two is a home inspection. A home inspection is essentially where a home inspector that you hire, that you choose, goes out to the home that you're under contract for, and based off their experience and their qualifications, do a visual inspection of the property. They do their best in looking for clues and signs of wear and tear. Of course, they're not going to break down walls to see if something is in between the walls. They're going to tell you, hey, there's this that might need repair in 5 years. Oh, hey, this is in very bad condition. Or I've even heard, hey, the pool is shifting, so this is going to cost you $30,000. So that's why it's very, very important to get a home inspection. I have had a few realtors tell me, hey, my client doesn't want to get a home inspection. And by the way, typically they're anywhere from $500 to $1,000 depending on the size home. And this client was like, hey, I don't want to get a home inspection. And just last week they canceled because the agent was like, hey, I really recommend you get a home inspection. The client got the home inspection. They found out that the foundation was completely terrible and they canceled escrow for that reason, because the seller was like, hey, we're not going to fix that. And if they wouldn't have got that home inspection, that would have cost them thousands and thousands and thousands of dollars. All right, number three is working with a skillful, knowledgeable, and experienced agent. Why am I saying this? I'm not just saying this because I'm promoting real estate agents. I'm saying this because there are certain parts in the process where, if you were to do it on your own or something were to go wrong, or maybe someone didn't push for you, that can cost you thousands and thousands and thousands of dollars. For example, an agent's going to be very important in constructing the perfect offer on that home that you really love. And there can be agents that, because the home is listed at $750, they offer $750 and then you get your offer accepted. But the great real estate agent will be like, okay, it's listed at $750, but no one is submitting an offer, or maybe they're a really good negotiator. Maybe the property's been on the market for 6 months and he's able to construct a deal where you're able to get a deal, right? You're maybe able to get it for $740 or $730 or $720. So it's not always finding a real estate agent that's your best friend. It's about finding someone that's skillful, knowledgeable, and has experience. Another example is the home inspections, right? We just talked about home inspections. Let's say the pool needs a $30,000, $50,000 repair. A great real estate agent is going to be able, or more able, to negotiate getting some kind of credit for you, a seller credit that you can use to offset your closing costs. And if you have an agent that's not a great negotiator, that's going to come up and maybe they're going to get you $2,000 in seller credits or $5,000 in seller credits, compared to another agent who's more experienced that can maybe get you $30,000. So that's a huge difference, right? So that's something to keep in mind when you're out there looking for real estate agents is, hey, is this guy or gal going to make sure that I get, the best deal on the property and also the most seller credits in this transaction? I just closed a deal 2 weeks ago where the agent was able to get the client a $16,000 seller credit, which is completely unheard of, especially at that price point, meaning they were able to come in with less money by $16,000. That's a huge deal. All right, number four is working with a great loan officer, a great mortgage broker. And I'm not just saying this because I'm a mortgage broker, because I'm a loan officer. There's actually things just like the real estate agent that can cause you to lose money or not save as much money if you pick the wrong loan officer. For example, taking the application, looking at your numbers, getting a clear picture, asking you the right questions, and then based on that information, getting you a program that best fits your needs and showing you multiple options as well. because there may be a program that you think you want, that maybe you saw on TikTok or Instagram, and that's not the right program for you. So it's very important that you work with the right loan officer that gets a clear picture and presents you multiple options so you can be like, okay, this one's better for me. I thought that one was good, but this one's actually better. That's going to save you thousands of dollars, like the example I gave earlier, putting 15 or 20% down or 5% down, right? Maybe you're like, I want to put 20% down, and a loan officer gives you that because he's an order taker. He didn't ask you the right questions. He didn't give you multiple quotes. Another loan officer could have been like, hey, it's a better idea, or hey, here's another option of putting 5% down, and you may like it more. That just saved you $50,000, $100,000. Another thing is things like discount points. So a discount point is something that you pay in order to receive a lower interest rate. The other term is buying down the interest rate. Discount point is just more technical, but it's the same thing. So for example, a loan officer might give you a quote with a much lower interest rate. It looks super nice, super pretty, but you're paying $10,000 for that lower interest rate. And that lower interest rate is only going to save you $50 a month, let's say, for example. And you're going to refinance in 6 months. It's not a good deal, you guys, because in 6 months, you're going to save what, $300? And that lower interest rate costs you $10,000. And some loan officers will include them and people won't know about it. And they'll think they're getting the best interest rate when they're getting charged a lot of money for that interest rate, and it's not a good investment. All right, number 5, and this is actually the bonus. You guys are gonna love this one. So a common question in real estate is, hey, when's the best time to buy real estate? And of course, it's always a good time to buy real estate, but actually, there's a great time to buy in terms of what month to buy in. And that's because particular months have lower closing cost requirements based on the tax impound schedule. For example, and I don't want to get too complicated here, but for example, when you buy a home, there's a little piggy bank that the bank creates or sets aside that they use in order to pay the taxes in your state. So depending on when you close on certain months, you'll have to pay a different amount in terms of months of taxes. For example, in California, if you buy a home and close in February, you only have to pay 2 months of taxes. So let's say the taxes for that home you want to buy is $250. You're only going to pay $500 for those impounds if you close in February, whereas there's other months that you may have to pay 9 months of taxes. So if you do the math on that, $250 times 9, that's a few $1,000s that's going to be added on your closing costs. So this is why I recommend also when you're buying your home, ask your loan officer, or you can also look it up on the web for your particular state. Hey, what's the lowest tax impounds collected in my state for real estate purchase? You can just search that up on Google, and that'll save you a few $1,000s when you're buying your first home. Because again, there are some months where 9 months of taxes are collected. Pretty much it for today's video. Thank you guys so much for watching. Comment down below what you guys thought. DM me if you want more information about buying a home. I am licensed in California, so I'm happy to help you out and get you a soft pre-approval as well. Appreciate your time. See you in the next one, and be great.